Hey guys, so it's Afrika Jade with Keller Realty at the Parks. I am here coming to you guys today for my future homeowners. I want my future homeowners to know how important it is to build your credit. Speaking from personal experience, my credit score was like 472 points back in 2016. It was shot. And I was going through a lot, lost my job, couldn't afford the credit cards that I had, and couldn't pay them. So my score plummeted. And because of that, it was hard for me to get a traditional credit card to rebuild my credit history. Yeah, I could have paid off all of my collections, but it still wouldn't have helped me build credit and get back to that number that I was at because I didn't have any credit at the time. All my credit cards were closed. Yeah, it was just a reset process that I was going through. So the credit card that I ended up getting was a secure credit card through Capital One, which I recommend to anybody that has not built credit yet, anybody that is trying to rebuild your credit, anybody that does not have a credit card. I recommend getting a secure credit card, not one of the store cards where you can only shop at Macy's or you can only shop at TJ Maxx. Get you a secure credit card that is good for emergencies or hotel stay, or if you need to rent a car. The great thing about the Capital One Secure MasterCard, this is what it looks like. It's pretty. I don't want y'all to see my number because y'all not going to be ordering no Fashion Nova on my card. But the Capital One Secure Credit Card, how it works is you'll apply on Capital One's website. You do need a traditional bank account. You do need a traditional checking account because in order to make the deposit, the initial deposit that's required, they have to transfer it from your bank account and you have to link them together. So you go to Capital One's website and what you'll do is fill out the application. It'll ask you simple questions. You'll put in your employment history and all of that information. Once the application is done, the pre-approval application is done, it'll tell you what you qualify for. So for me, I had to make, I think it's 3 different deposit amounts that you can make based off of their pre-approval application. So the first deposit amount, I believe it's $49. The second deposit amount, I believe it's 79 or 69. Hold on, let me get, no, it's 49 for the first initial deposit, the low deposit amount, 99 deposit, and then a $200 deposit. So I was required to make a $99 deposit after I did my application, which gave me a credit limit of $200. So I paid basically $100. I have a credit limit of $200. So whatever I'm spending on this card every month, every time I pay it back, basically I'm paying back that deposit amount. You know, it's money that I have sitting on the card to show that, kind of like a security deposit. Your security deposit is there just in case if something were to default. This is money that's put up front for the company to take in the event that I do something that I wasn't supposed to do. So your deposit with your Capital One Secure card is money that you put up front so that if you can't pay your bill in the future, they'll just take it from your deposit and close your card. But the goal to the card is to make monthly payments. Go get gas, make monthly payments. Go get gas, make monthly payments. Another cool feature about the card is they give you the $200 credit limit. Your deposit of either $49, $99, or $200 is refundable. Not meaning that you can call them up and say, hey, I want my $200 back. No, you can call them up and say, okay, so I've been a client with you guys for about 1.5 years. I've been paying on time, haven't had any missed payments. Could you apply my deposit towards my balance? So let's say you have a $200 deposit and you have a balance of $200 and you don't want to make a payment this month. You just want them to take your deposit and pay the balance of the card. They can do that as long as you have paid on time and you've been good. Now, with my card, initially I started off with a $200 limit, but it increased to $500. I think after 6 months of consecutive payments, I ended up getting a higher credit limit of $500. I don't believe they go over 500 because I've had this card for about 3 years now and it has not increased past the 500 amount, but I did get the Capital One Quicksilver card, so I have a higher limit on that card. So yeah, what I recommend is To build your credit, start by getting a secure credit card. Start by paying off small things like gas and pay that off every month. Make sure that your credit, your debt to income ratio is below 30%. Make sure that your credit utilization is below 30%. So if you have a $200 limit, you can't spend no more than $20. $20 is what, 10%? So keep it under $60. That's what I would say. Keep it under $60 per month, because that's 30%. And then just pay that back every month. Every time you get paid, let me pay off my credit card. Okay, I ain't spent none on my credit card this month. Okay, so let me just go buy this, and then when I get paid, let me pay it off on my credit card. My credit score jumped significantly. It went from a 473. For granted, I had a couple credit dispute letters where I submitted some disputes for a couple of collection accounts to get removed off of my credit report, but it was a 472, and I believe within a year, it went up to like a 580. And that's still not like amazing, but it's way better than 472. 472, people wouldn't even look my way, and credit speaks, it's way more powerful than money. You can do a lot more things and a lot more doors open when you have credit, because then you have cash, for emergencies, but credit is what you use to build your wealth. So I have included the link to my Capital One credit card account. Well, not my account, but I've included the link to the Capital One website where you can go and actually apply for this card. Go do it today. There's no need to wait. There's no need to, oh, well, I'm still a little nervous. No, go do it today. As long as you have a consecutive job where you get paid, consecutively every 2 weeks or every week or every month, you're able to, budget yourself and spend, under your 30% limit, and then pay it back so that you can build credit history. So step number 1 to buying a house, becoming a home buyer, is start to understand what's in your credit report. And if you need some help, you want me to take a look at your credit report, I can do that, because like I said, my credit score was 472 points. Like, I didn't even want to log onto Credit Karma. That's how bad it was. But yeah, no rain, no flowers. So sometimes you got to go through that low credit score in order to understand how important it is to keep your score up. So once you hit that bottom part, now you're like, okay, so I'm up here with a high credit limit, folks. So, I don't know what y'all below 580 credit score people be doing with y'all lives, but you need to get a secure credit card. And then after a year or so, then you can apply for a traditional credit card and get a higher limit. The scary part about having the higher limit cards is you can spend a little bit more. And if you spend a little bit more and you got to pay it back, then that's how you get yourself in debt. So that's what you don't want to do. You don't want to spend beyond your means. If you only make $30,000 a year, you should not be putting $15,000 of that on a credit card. Doesn't make any sense. So let's use our brain. Let's think about generational wealth. How can I build myself up so that my kids don't have to, learn this stuff that they should have learned in school, So yeah, if you guys have any questions, my information will be in the description below. Phone number, email, website, anything, Telegram me. You can send me a letter to my office. So yeah, if you guys have any questions, don't hesitate to reach out to me. And I am going to make another video about Capital One because I love their products. They have a high interest yielding savings account that I recommend for anybody that's looking to purchase a home. Just automatically take the money out your current checking account, put it in your high interest savings account, don't touch it, and just let it keep building higher interest than a traditional savings account through your banking institution would allow you to. So that video is coming next for any of our home buyers, people who need credit help, people who need financial help. They're just different tips that I've learned through my journey of trying to build generational wealth for my future offspring. So yeah, if you have any questions, please do not hesitate to hit me up. All right, y'all.